This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November 20th, 2015. Our time is 8:47 Mountain. A radio show runs on 630 CHED in Edmonton, normally Sunday afternoon at 3. We are on at noon today due to the Edmonton Eskimos' Western Final against the Calgary Stampeders. We're on before the pregame show with Dave and Morley. And we will tell you right now, if the Eskimos win and are in the Grey Cup, we will be on next week from 1 until 2 o'clock. If the Eskimos lose, which we don't think they will, we will be on at our normal time of 3 to 4. So here's hoping that we'll be talking to you next week from 1 until 2 with the Eskimos in the Grey Cup. Don't forget, if you ever miss a radio show, they're archived, streaming live on Harold's two websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. We're portable. We go on your portable device anywhere you do. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week is a 1.12 carat cushion cut, fancy vivid yellow, internally flawless. See a picture of the diamond, video of the diamond, featured diamond at rarecoloreddiamonds.com. And it was another interesting week for diamonds. Later in the show, we will have diamond auction results from last week in Geneva with Sotheby's and Christie's. A big diamond was found. Also, one of the stories that we have, and it's very, very funny, that $170 million Modigliani painting, well, it was purchased and it was put on an Amex card, and we will talk about that. It was very, very funny. The reason behind why they put it on an Amex card, you won't believe it. Obviously, Harold, since we spoke to our radio listeners last, we had, after we taped the show, we had the terror attacks in Paris on Friday, which were just absolutely horrific. And of course, Paris and France continued to be affected throughout the week as they went in and went after other terrorists. It was a very frightening week for those in Paris and France. Now, as we tape this morning, there's some sort of incident going on in Mali, and it seems like there's an issue with a hotel and hostages. We do not know at this point if it is a terrorist attack. It looks like it could very well be, but it is a very frightening time, and I know ISIS has threatened North America, in particular New York City, and I know, Harold, that the last thing we want is anything to happen to us here in North America. We saw what happened in Paris last Friday, and it's absolutely horrific. And when we talk about investing, we talk about geopolitical, and sometimes people are wondering, why do you talk about geopolitical? Why aren't you just not talking about the financial side of things? Geopolitical in our world today is so important. As we saw last Friday, you need to take into account in your portfolio geopolitical events. And that's why we advocate hard assets like diamonds, gold, and silver, because they maintain their value and even go up in value in very chaotic geopolitical and financial times. But Harold, here's hoping that ISIS is unable to bring the fight to North America. We do not want that in any shape or form.
Better believe it, Randy, again, but this is a force to reckon with, and what they accomplished in Paris was quite frightening, to be honest with you. Again, it's very, very difficult to fight a group like that, but the threats against the United States and North America are extremely very concerning, and obviously something that everybody is taking seriously. Because the fact that the borders have not really been protected in the United States, and we know that because, of the tremendous amount of people that have come over from Mexico. So we have to believe that some of these ISIS terrorists have been coming into the United States through Mexico because it was such an easy thing to do. So again, it's a very concerning situation, and obviously you're 100% right. Geopolitical situations do affect the markets in a huge way. It can affect the currency markets or the metals markets or the grain markets or whatever, but the fact is that these are very, very trying times and extremely dangerous, and we really need to know what's happening at all times if we're going to make intelligent decisions when it comes to protecting our money. So this week, again, aside from Thursday, the markets did exactly what we anticipated that they would do. Gold dropped down to $1,065, broke the 1,080 level, which is a very heavy support level in gold. It broke it, closed 2 days below it, actually went down to as low as 1,065 until Thursday, when some short covering made the markets go up about $12. Today, as we're taping the show on Friday, the gold market's down another $250. So we're trading right at the 1,080 level. But again, that 1,080 level is irrelevant at this particular point. The next major level of resistance, for support for the gold market is actually right now at about 1,050, 1,025, and $1,000 is major support for gold, with, believe it or not, the biggest support for gold being at $850, which was the old high back in 1980. How crazy is that? But that's how far you have to go back to see the heaviest support in gold. I'm not necessarily saying that gold is going to drop to $850, but that is the heaviest level of support, and realizing that, again, the gold market is manipulated, these type of moves are possible. So again, all we can do as an analyst is analyze what these markets are going to do over the short term and see if support and resistance levels hold, and if they don't, then we can accurately detect which way the market is going to go from there. So at this particular point, there's no doubt in my mind that gold is going to $1,000. We've been saying that for almost a year now, and we're pretty close to it at this point. As gold continues to fall, because of the tremendous strength of the U.S. dollar, silver is falling with it. Not as much at this particular point, but the fact is that if gold hits 1,000, which is really only $80 away from where it is right now, that would equate to silver being at around the 1,250 level in that particular area. And again, we do anticipate that those prices are going to get hit. So don't leverage your positions. Don't finance your gold or silver. Own it outright. We don't own gold and silver to trade it. We own it to basically hedge against all the bad things that can happen. Now, again, at this particular point, there's a direct correlation between gold and the U.S. dollar, and this week the U.S. dollar hit 99.60. So we're getting very, very close to that number that I've been talking about for over a year now, which is par on the U.S. dollar, which is at 100 points. Right now we're at 99.42. Now, to break par in the U.S. dollar is not going to be easy. There's major resistance at the par level, but we did get to the highest point that we've been at in basically since the 90s. We've actually gotten to 99.60 this week. So again, as we get closer to par, which is at 100, we will see the market back off. And in December, if it turns out that the Federal Reserve is not going to raise interest rates, well, a lot of the move up to par has been built into the market already. So if they don't raise interest rates, if the Federal Reserve does not raise interest rates in December, you will see the market back off a bit. But at this particular point, we still have a fair amount of time for that to happen. It's quite feasible that next week, seeing that we already did hit 99.60, that we could see a rally that could take us closer to the par level in the dollar. The reason that is so important, it's probably going to take 3, 4, maybe 5 attempts for it to break above par. But once it does, in the futures market where the dollar is traded, there are buy orders above that par level. So once it breaks par and all these orders start to get hit, you're going to see a massive move on the upside of the U.S. dollar. It's going to happen very, very quickly. So again, at this point, if you are going to go into any U.S. investments, and we are highly recommending of getting some money out of the Canadian dollar, which is going to continue to fall, which is at 75 cents right now as of today. But the fact is that oil is down another 42 cents. So the Canadian dollar is going to fall along with the price of oil. And the reason we say that the price of oil is going to fall is primarily because Iran is now starting to ship 500,000 barrels of oil a day, even though they're selling it below their cost. Means that they're so dire and depressed for money that they will sell this oil at a loss just to get back into the game. And we certainly understand why that's going to happen. The same thing is happening at this point with Russia. So there's already a saturated market in oil. Then you've got two massive producers coming back onto the market, producing, probably 1 million barrels a day in an already saturated oil market. So which way is crude going to go? It's got to go down. It's got to go down to the low 30s, high 20s, which will bring the Canadian dollar down to 60 cents. I know that's not something that most people want to hear, but I just don't see any way that that's not going to happen. So at this particular point, and I'm going to let you know that there's no way that I see anything stopping the U.S. dollar from breaking par and going to 108 to 110 in that area, which will bring gold down to the $950 to $1,000 level within that area, and that could happen fairly quickly. Now, on the other hand of it, and this goes to what Randy was talking about at the beginning of the show, is geopolitical situations. The only thing that will reverse the price of gold at this particular point, even though we've seen massive shortages in the market, and the price of gold should be substantially higher than where it is right now, but the one situation that will move gold higher substantially is if something happens in New York with ISIS and they do attack Wall Street or whatever. You'll see the market go crazy on the upside. So again, that's why I'm saying that you don't trade gold. You don't look, to play the peaks and valleys and that type of thing and leverage that market. You don't want to do it. Leverage can kill you in these markets. What we want to do is own gold and silver as a hedge against anything bad that's going to happen. And believe me, there are things in the market at this particular point that could definitely make that happen. So over the short term, barring anything happening with ISIS attacking Washington or New York, anything on North American soil, you see, anything that happens elsewhere does not affect our markets really in any way. As horrible as the situation was in Paris, it didn't affect our markets at all. In actual fact, as we're taping the show here on Friday, and I've been mentioning to you that even though the stock market should reflect the overall economy of the country that it trades in, right now the Dow is trading at 17,884. Aside from something happening with ISIS in New York, whatever, the Dow will be manipulated up to 20,000. That doesn't come close to telling what the real economy is in the United States. So again, you've got these geopolitical situations that could change the markets in a huge way. If something happened in New York, you would see the Dow Jones plummet. You see it drop at over 1,000 points because all that the markets are concerned about at this particular point is what is happening in the United States at this time. So again, barring anything with ISIS happening, my prediction is that the Dow is going to continue to rise, even though it does not reflect accurately the U.S. Economy. In actual fact, if the Dow did reflect the U.S. economy, the Dow would be at about 9,000 or 10,000 right now, certainly not trying to break 18,000 at this point. The other situation is that the U.S. dollar will continue to rise, pushing gold lower. If we get down to the $1,000 level and the U.S. dollar gets to par or higher, just watch and see what happens to those markets. So again, at this point here, that's exactly what we see happening. It certainly has been happening right in front of our very eyes, so it's certainly not done with smoke and mirrors. It's only logic that this is going to happen. And today, I've been an analyst in these markets for half of my lifetime, for 33 years now. And again, I can certainly differentiate between a manipulated market and a market that's trading on technicals and fundamentals. So at this point, we've got a manipulated market, and we've been able to figure out basically what's going to happen with these markets. The Dow is going to go higher, gold is going to go lower, the U.S. dollar is going to go higher, oil is going to go lower, and the Canadian dollar is going to drop. So again, if that's what the scenario is going to be, then we make certain that we understand that's happening, and either we just let the market do its thing, which is the smartest thing to do. As long as you're not financed or leveraged, you shouldn't have any issues. If you own your metals outright, just sit back and let the markets do their thing. It's not going to cost you any money. But the fact is that there are situations in the market that will make these markets skyrocket again. One of them is definitely going to be the fact that there was a massive shortage in the gold and silver market physically, and that is definitely going to help us. The other thing is that the U.S. dollar is going to top out. It can't go on forever. I highly doubt it's going to go above the 110 level. I think that would be an all-time high in the U.S. dollar. So again, I think we're getting close to seeing the type of moves that are going to make the metals go up again. And then again, if something does happen with ISIS in New York or in Washington, then all bets are off and the metals are going to go crazy on that and the stocks will plummet, and so will the U.S. dollar. So again, that's what we see happening at this point. Take that information and act accordingly with it. It's strong information that will definitely help you. The other thing is that you want to get some money out of Canadian investments, Canadian dollar-based investments, because, again, the Canadian dollar is going to continue to fall substantially. You want to get into some U.S.-based investments, and I've got some for you. So, again, at this point here, if you're confused what to do, if you don't know what's happening and why gold is doing what it's doing in the currency markets and everything that's happening at this particular point, and you need information, we've got that information for you. Call me. I'll sit down with you over the telephone and explain everything to you and help you make up your decision as to where you should put your money. We do have some U.S.-based investments that are doing extremely well, that are very conservative and very safe, but they're returning much more than what the market is returning at this point. So, again, if that's of interest to you, call me. The call is free. The time is free. We don't charge our clients for anything. We don't charge for the newsletter. We don't charge for the radio shows. We don't charge for our seminars. And again, if you're confused and you need help and you need some financial advice, again, and you're a listener to our radio show, we're here to help. All you have to do is give me a call next week. I'll be more than happy to explain to you what's going on and how that may affect you and how you can possibly profit by it.
You're listening to the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We're on right before the pregame show for the Western Final between our Edmonton Eskimos and the Calgary Stampeders. The winner is heading off to the Grey Cup in Winnipeg. Now, if the Eskimos win, next week we will be on from 1 until 2. If the Eskimos don't get in, we'll be on at our normal time of 3 to 4 o'clock. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, or call 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week is a 1.12 carat cushion cut fancy vivid yellow internally flawless. See it at rarecoloreddiamonds.com. We have a picture of the diamond and video. Later in the show, we have auction results from Christie's and Sotheby's last week in Geneva. Of course, we spoke on the show last week about pink diamond selling for $28.5 million, and then there was a blue diamond that sold for $48.5 million, and both went to the same little lady. We'll tell you about that in the second half of the show. Also, a painting, a Modigliani painting, sold for $170 million. And you won't believe how they paid for it and why they paid for it in the form that they did. Those stories coming up in the second half of the show. If you'd like to receive our free weekly newsletter and obviously speak with Harold personally and privately about what's going on in the world geopolitically, financially, how you can profit and protect the investments you have, connect with him at rarecoloreddiamonds.com, 1-800-432-1022. Greg Hunter interviewed Mike Maloney, and he said that the bond bust will be the biggest crash in history. Precious metals expert Mike Maloney says we are experiencing a roller coaster crash. The second half of the economic storm that started in 2007 and crashed in 2008 have been in the eye of the hurricane from 2009 until today. The second half of this economic storm is about to start. I believe in 2016 we're going to see something happen, and 2017 will probably be pretty bad for the general economy. If we have a currency crisis, a recession, and a changing monetary system all at once, it will be absolute chaos. Maloney says you can blame a lot of this wild ride on the Federal Reserve. He contends we're going into the Bernanke bust. The 2008 global financial crisis was Alan Greenspan's making. Ben Bernanke just reacted to it. It was caused by Alan Greenspan's reaction to the crash of the NASDAQ. So we had a crash of the stock market in 2000. Alan Greenspan overreacted and held interest rates down too long to try and get the stock market reflated and get it back up. He accidentally created a real estate bubble. The next crash was both stocks and real estate, as we remember, in 2009. This time, it will be stocks, real estate, and bonds. So this is going to be the biggest crash in history. This bond market bubble is something that has been constantly inflated for the past 35 years. When it pops, it's going to be devastating. A bond bubble bursting is deflationary. Where does that leave gold and silver? In the last deflation, which was well studied, the Great Depression, gold rose 70%. If you own gold and ended up with 2.5 times more than your purchasing power as a result, one of the few assets that actually did well in the last great deflation was gold. And Greg Hunter, he was interviewed. Greg Hunter interviewed Mike Maloney, and you can see that interview in our free weekly newsletter. If you'd like to get our free weekly newsletter, connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. And Harold, we have about 2 minutes left in our first segment. But I do agree with Mike Maloney. Something is coming, and it does seem that we are experiencing massive deflation at this point. And if that bond bubble does burst, if they start to raise interest rates, really all hell could break loose. As he was saying, currency crisis, recession, changing monetary system, it would be absolute chaos for sure.
You bet. And so many people have so much of their money in the bond market, that would be an absolute catastrophe, obviously. But again, the whole financial system as we know it is on eggshells. Don't forget, there was trillions and trillions and trillions of dollars printed. You know, the British pound and the U.S. dollar have lost 99% of their value. How can the U.S. dollar be the strongest currency in the world when it loses so much of its value? And since 2008, when this whole financial debacle hit, you know, they printed in excess of probably $20 trillion. So the fact is that this is all a bunch of smoke and mirrors, and one day the derivatives market, the currency markets, the bond markets, all of them are going to have to pay for the manipulation that's happened for the last 6 or 7 years. It's really an unbelievably frightening financial situation, Randy.
And if you would like it explained to you, speak personally and privately with Harold Siegel. Connect with him at rarecoloreddiamonds.com or call 1-800-432-1022. The call is free, and obviously Harold is more than willing to take the time to speak with you over the phone. It's private, confidential, 1-800-432-1022 or rarecoloreddiamonds.com. Our featured diamond of the week is a 1.12 carat cushion cut, fancy, vivid, yellow, internally flawless. We'll come back and talk more about diamonds and rarecoloreddiamonds.com as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on November 20th, 2015. Our time is 9:11 in the morning, Mountain. And don't forget, our show normally runs on 6:30 CHED, Sunday afternoon at 3. But due to the Edmonton Eskimos game, Western Final, Calgary and Edmonton, winner to the Grey Cup, we are on today, noon until 1. The pregame show is on the way in about 25 minutes' time with Dave and Morley. And good luck to our Edmonton Eskimos. If they do win, which we expect they will, they'll be in the Grey Cup, and our radio show will run next week, 1 until 2 o'clock. If the Eskimos don't win, we'll be on at our normal time of 3 to 4 p.m. Don't forget, if you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on radio. You'll find us there. We're portable. We go on any of your portable devices. We have a free weekly newsletter, and it's the companion to our radio show. You'll get a chance to really read all the material that Harold and I are seeing on a weekly basis and helps make up the info for the radio show. If you'd like to see the stories, connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, or call 1-800-432-1022. That's 1-800-432-1022. And our featured diamond of the week is a stunning 1.12 carat cushion cut, fancy vivid, yellow, internally flawless. We do have auction results from Christie's and Sotheby's last week. The big story last week was that, well, a young girl. She is the proud owner of 2 diamonds thanks to her father. 3 of the world's costliest diamonds now belong to a 7-year-old. Her name is Josephine. Let's explain how. Hong Kong billionaire Joseph Lau has spent $69 million for a rare 12.03 carat liquid blue diamond. He has gifted the stone to his 7-year-old daughter, Josephine. The diamond was also renamed Blue Moon of Josephine. This comes just a day after the tycoon, affectionately known as Big Lou, spent a whopping $40 million over a 16.08 carat pink diamond for his daughter that he renamed Sweet Josephine. Now, in U.S. dollars, the prices were $48.5 million for the blue diamond. For the pink diamond, it was $28.5 million. 6 years back, he bought then one-year-old Josephine, her first major diamond, a 7-carat blue diamond for $9.48 million U.S. This diamond was renamed as the Star of Josephine. While you marvel at the luck that follows young Josephine, let us tell you that she's not the only lucky daughter. In fact, her eldest half-sister, 14-year-old Zoe, also got 2 amazing gifts last year. She was gifted with a 9.75 carat Zoe diamond worth $32.6 million U.S. and a Zoe red ruby at $11.9 billion. Big Lou, well, he sure knows how to keep his daughters happy and the way to their hearts. Diamonds are a girl's best friend, without a doubt. But Harold, we do have auction results from those 2 auctions, and they were outstanding. And yes, those diamonds went for around $77 million combined, $48.5 and $28.5, and Josephine is one lucky little girl.
She certainly is. And can you imagine what those diamonds are going to be worth? I mean, a $55 million blue. Can you imagine what that's going to be worth in 20 or 30 years from now? You know, the fact is that these diamonds just have no limit, just like the painting that sold for $170 million that he put on his American Express card. But a $170 million painting. So this is what the world is coming to. And again, it's the hard asset market, it's the diamond market, it's the art market, it's the classic car market. That's where most of the money is being made. It's certainly not being made in the stock markets at this particular point or in real estate. The fact is that the markets have changed, and especially after 2008, people are looking at alternative investments that are out of the mainstream, you know, that you hold into your hand, that you can see and hold and you can enjoy, as opposed to paper assets that are just totally manipulated whenever the government needs it to be. So, again, this is just a really amazing time to be in the diamond business, the art business, the classic car business, because of what's happening in the financial world. So, again, she's got 3 amazing diamonds. We know that the longer you hold diamonds, the more and more they go up. I've mentioned many times on the show how my wife's girlfriend inherited from her grandmother a 5-carat pink diamond. Her grandmother bought it 50 years ago for $50,000, and today that diamond has been appraised at over $5 million. So again, these type of assets are longer-term investments. They don't go up and don't trade like stocks or commodities because there isn't an exchange to trade them. There's only one diamond like that blue diamond that was sold last week, so they can never be traded like a commodity or like a stock. But the fact is that these diamonds have track records. They're sold at private sales and at auctions, and again, they take on a life of their own when diamonds like that go to auction. Now, what we've done is we've taken the diamond market, the investment diamond market, to a different level. The fact is that you don't have to buy multi-million-dollar diamonds in order to make money in the diamond market. In actual fact, if you look at the auction results of many of the times from Christie's and Sotheby's, the diamonds that have the biggest appreciation are the more affordable diamonds, the diamonds that are in the 20, 50, 100, 200,000 range. Those are the diamonds that go up the most in value. In actual fact, our yellow flawless diamonds, for example, like the featured diamond this week, is an extremely rare diamond. Now, it's not a 20-carat diamond, but it is over 1 carat, which is extremely important. Number two, the color of it. It's the best that you can possibly get. It's a vivid yellow diamond. Now, there's many different colors of yellow. There's faint yellow, which is basically a very poor quality white, but there's faint, and there's very light, and there's light, and there's fancy light. Then there's fancy yellow. Then there's fancy intense yellow. The odd time a fancy deep yellow will come out, and then the very best of all is the fancy vivid. So the higher the saturation, the more valuable the diamond is. So the fact is that if you look at today's featured diamond, it's over 1 carat. It's the best color you could possibly get. It's a vivid yellow flawless. The color is a 10 out of 10. It's so deep and so beautiful. You'll be able to tell that just by watching the video. And then on top of that, look at the clarity grading. It's also the best you can get. It's an internally flawless diamond. Very, very few diamonds ever get the grading of internally flawless. So this diamond is over 1 carat. It's the best color, and it's the best clarity that you could possibly get. A diamond like that could go up 15 to 20% a year. You hold on to a diamond like that, you put it away for 10, 15, 20 years, a diamond like that could go up 3, 4, 500% from what you paid for it. Along with that, it's also an asset that could be sold in other currencies. As the Canadian dollar is falling and falling, most of my clients that own diamonds bought them when the Canadian dollar was even or stronger than the U.S. dollar. So not only has the diamond gone up in value, but it's also gone up in the currency market by about 30%. That's what's so exciting about owning diamonds as an asset class. And again, there's almost no other market in existence that does what the diamond market does, because on top of it being an alternative asset and a hard asset that is extremely rare, but the fact is it's also portable private wealth. It could be taken other places. If you were going to Europe, you could take that diamond with you. If you're going to the United States, you could take that diamond with you. So the fact is that it's never been more important to own an alternative asset like a rare colored diamond, a strong art piece, a collectible classic car than it is right now, because currency markets are devaluing all over the world. And if you listen to the radio show on a regular basis, you understand the currency markets a lot better because we talk about it almost all of the time. So again, this is an extremely important time to get out of the type of investments that most of you are in. The fact is, if you're sitting in paper assets like stocks and mutual funds, the best example I can give you is what's happening with your retirement savings plan. The fact is that if you own a retirement savings plan, the fact is that it hasn't increased in value by hardly any amount over the last 10 or 12 years. So why is that a good investment? Every year we put our money into an investment that does nothing. And the only benefit of owning a retirement savings plan is you get to defer taxes. Hopefully you get to invest money in something that is going to make you money and be able to defer your taxes. But that's not happening because nobody's making money in that market. The fact is, if you don't own one of 5 or 6 stocks, Google and Apple and those type of stocks, you're not making any money. Almost every other stock has not done well. So why do you persist, or why do people persist to put their money where the financial advisors tell them to? Because the financial advisors, their outlook on the market is, well, even if the Dow or the stock market falls, it's going to come back eventually. Well, that's not a sound business transaction. The fact is that if we know that the market is going to fall, we shouldn't be in it in the first place. If it's as risky as it is, where most people that trade stocks are losing their money, then why in the world is that something that the government wants us to invest in? So that's not where we put our money. We put our money into much safer investments that don't lose your money. The fact is that we all want to make money on our investments and make our money grow, but that's not possible sometimes. Sometimes it's just as important to keep your money, not lose it in the market like most people are doing at this time. So, again, at this time, we're very, very comfortable with what's happening in the marketplace. Gold is going to continue to drop unless something happens with ISIS within the near future in New York or in Washington. If that doesn't happen, the U.S. dollar is going to break par very soon, and the gold market is going to fall down to 1,000. That's going to happen unless something happens with these threats from ISIS. So right now, you want to hold your gold, your diamonds, you want to keep them physically on you, because you never know when something is going to happen and you're going to need to make a move. So again, at Randy, I'm very comfortable with what's happening in the market at this point, and extremely comfortable with what's happening with diamonds, especially after what happened last week with two of the most amazing diamonds being sold and the prices that they were sold for.
You're listening to the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We're on today prior to the Western Final between our Edmonton Eskimos and the Calgary Stampeders, the winner off to the Grey Cup game in Winnipeg. Don't forget, if the Eskimos do win, which we're expecting they will, we will be on next week from 1 until 2. And if the Eskimos don't win, we'll be on from 3 until 4. Next week on 630 CHED. Our featured diamond of the week from rarecoloreddiamonds.com is a 1.12 carat cushion cut, fancy vivid yellow, internally flawless. Take a look at it at rarecoloreddiamonds.com. There's video and a picture there. If you'd like to learn more about investing in hard assets, speak personally and privately with Harold Siegel. 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. As we touched on last week in Geneva, there were two auctions, one for Sotheby's, one for Christie's. One was on the 10th, one was on the 11th. We had a blue diamond sell for $48.5 million. The estimate on it, they were saying anywhere, and it was a pretty broad estimate, anywhere from $34 to $53 million, and it went for $48.5. And now proud owner of that diamond is Josephine. We also had a pink diamond, and the pink diamond sold for $28.5 million. The estimate on it was around 24 to 28. It went for above what they originally anticipated. We do have some auction results for you. This is from Sotheby's, and it was November 11, 2015, Geneva, Switzerland. To give you an idea, Lot 495 was a fancy, vivid yellow diamond ring. And this was a very stunning diamond ring. The estimate on it, $1.2 to $1.5 million. It sold for $2.58 million. Lot 507, an attractive, fancy, intense blue diamond ring, set with a pear-shaped, fancy, intense blue diamond weighing 3.17. The estimate on it, $1.1 million to $1.7. It sold for $2.5 million. Lot 484, an attractive, fancy brownish orange pink diamond. The estimate on it was $971,000 to $1.4. It went for $2.1 million. Lot 485. Fancy intense yellow diamond brooch. The estimate on it, and this was $971,000, and it sold for $1.9 million. Also, lot 471, a faint pink diamond ring, and the estimate on it, $388,000 to $687, sold for $1.3 million. So you can see some of the price action that took place at Sotheby's and Christie's in Geneva. One of the stories we wanted to touch on today's show, and it was interesting because Harold actually just sent me a picture. sort of ties in with this. The biggest diamond in more than a century was unearthed in Botswana. It was 111 carat, and just an absolute monster diamond. You'll see the story in our free weekly newsletter. So it was 1111 carat gem quality diamond, second in size only to the Cullinan diamond, cut into the British crown jewels, which had been unearthed by Lucara Diamonds in Botswana. And it was recovered, and they announced that this week. Now, Harold, you sent me a picture of a diamond that Rare Colored Diamonds has, and it is a monster rough diamond. And give us a little more information on that.
Well, the fact is that there are some very, very large diamonds around, but the fact is that they're very, very few and far between. So when a diamond like the one that came out of Botswana, I mean, you're talking about a massive diamond. You know, the thing is that when you have a diamond that large, most people will think that, you know, you're going to cut, let's say it's 100 carat diamond. Let's say, you know, it's 100 carat rough. Depending, that diamond could be looked at by a gemologist and a cutter for years before they cut that diamond, because it's such a valuable piece. And the fact is that it's going to be a work of art. So they have to examine the diamond for a long period of time and have a game plan as to how they're going to cut that. And most people would think, and rightfully so, that when you have a diamond that large, that it's going to cut into several different diamonds, but that doesn't happen. The fact is that most of that diamond that is cut will be wastage. So it's not that you're going to get 4 or 5 or 6 different diamonds from a diamond like that. You're not. You're going to get one major diamond, and the rest of it is going to be wastage. So, again, it's just a very interesting part of the business, and a part of the business that we're very, very excited to be in. I get to deal in the rough diamond market basically on a day-to-day basis, and I can assure you that some of the diamonds that we've seen lately have been amazing. We've seen some outrageous green and orange diamonds that will literally take your breath away, and most people have never, ever had an opportunity to see diamonds that are uncut before. So in actual fact, if you've never seen them and you would like to see what a rough, uncut colored diamond looks like, definitely contact me and I'll send you some pictures. It's very interesting. In fact, soon on our website, we're going to be showing some of these amazing green and orange diamonds, and we're going to show you both. We're going to show you the diamond before it was cut as a rough diamond and what it looked like after it was cut, and what size it was before it was cut, and what the size was after it was cut. So it's a very interesting part of the business, and we would like you to be able to inquire into it. So please give me a call, and if you want to see some of these diamonds, it would be my pleasure to show them to you.
Featured diamond of the week is a 1.12 carat cushion cut, fancy vivid yellow, internally flawless. This would be a great investment diamond for your portfolio. If you'd like to learn more, connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. If you'd like to see the auction results from Christie's and Sotheby's last week, we'll be happy to send them out to you. You can get our free weekly newsletter. Now, as promised, we wanted to talk about that Modigliani painting. The guy who bought the $170 million Modigliani nude charged it to his Amex card. Last week, a Modigliani nude was purchased for $170 million, the second highest ever received at auction for a painting. The highest was a Picasso that sold in May for $179.4 million. Now, the new owner was asked, why would you put it on your American Express card? Why? To get the points. Why? So the family of the Chinese billionaire, Lou, could continue flying for free. That's how you become a billionaire. You're smart. Put $170 million on an Amex card for a Modigliani painting, and that's a lot of frequent flyer points, Harold. You could be flying a family and friends for generations on that.
Well, you certainly could, but you would think that a man that could afford to buy a $170 million painting and put it on his Black American Express card, flies privately anyway, so it's going to be interesting to see what he would do with $170 million worth of bonus points. But it just goes to show you that anything is possible, and people, no matter how much money they have, they think what they do with their money, and that's the point that I'm trying to make today. The fact is that we have to think about our money at this point, because just think about how difficult it is to make money today. It used to be that you could throw a dart against the Wall Street Journal and find a stock that was going to double or triple. Those days are long gone. Nobody makes money in the stock market anymore, and it used to be the same in real estate. But the fact is that doesn't happen so much anymore. After 2008 and 2009, again, the real estate market has changed. Sure, there's some opportunities in the market, but nowhere near what they used to be. So, again, at this point, we've got to be smart. Speculation is not a good thing to do at this point because there's too much uncertainty in all of the markets. So, again, my strongest recommendations at this point are to be very conservative, not to speculate, don't leverage, don't finance, don't anything like that when it comes to gold or silver or any of those type of items. Only the type of investment that will preserve your equity, like diamonds, but also give you an opportunity to make an awful lot of money. So, again, just to recap what we're looking at. We're looking that the U.S. dollar is trying to break par. It's very, very close to that happening. That's going to push the gold market further. We think that the next line of resistance minor is 1,050, 1,025, major is 1,950. I think that we are going to hit those numbers unless something happens with these ISIS threats that could happen in North America. If there was ever an attack on New York or on Washington, then all bets are off. Gold will skyrocket, as will silver. The U.S. dollar will plummet, and so will the U.S. stock market. So, again, don't trade your gold and silver. Hold it for a specific reason, and that reason is the uncertainty of the marketplace. The other thing that's going to affect gold eventually is going to be the supply and demand situation. Demand is very high physically for gold and silver, and the supplies are extremely low. This is one of the first times in history that we have ever seen a situation where a commodity as important as gold and silver, where there's an actual shortage in the market, is not going up, and the reason is that the government is manipulating the market down. So that's the way we see things at this time. On top of that, the diamond market is on fire. It looks amazing at this point, and so does the alternative asset market, which are gold which are diamond assets, which are classic cars and art, and all of them are selling at record prices at this time.
We've even seen handbags and watches sell for record prices, and I think there are some people who are wondering why. Well, it's a way for wealthy people to store their wealth. And I'm sure they're looking for some capital appreciation, but they're looking for the protection of putting money into a hard asset, full well knowing that we have massive currency depreciation all around the world as we face currency wars. And we've talked about on the show many times, invest in assets that cannot be debased or printed by governments. Diamonds, gold and silver, classic cars, artwork. Obviously, people are even investing in handbags and watches. We saw that record price for a Modigliani. We had the two diamonds go last week, $77 million, $28.5 for a pink and $48.5 for a blue. One of the stories that I thought was really fascinating, and you can find this in our free weekly newsletter. Get our free weekly newsletter from Harold, rarecoloreddiamonds.com, or call 1-800-432-1022. Jean-Baptiste Tavernier, a French merchant and adventurer who is best known for acquiring the Tavernier blue diamond. Then he subsequently sold it to King Louis XIV, first made a reference to pink diamonds in the early 1700s. In fact, Tavernier mentioned a very large pink rough diamond weighing about 200 carats, shown to him by, one of the Mongols in the kingdom of Golconda in 1642. This diamond, named the Grand Table, had a value of around 600,000 rupees at the time, is still the largest pink diamond recorded to date. The French merchant also purchased two pale pink diamonds around 1668 and drew the pictures of the stones in his travel book. Harold, with about 15 seconds left, these investments have stood the test of time, and that's where you want to be.
You bet, and they will continue to do so in a time when, again, it is frightening out there. There's so much risk. There's derivatives and all that. So, again, I think we have a good game plan as to which way to attack these markets. I'm very comfortable with which way the markets are going at this point. And, again, if you need any help whatsoever, I'm definitely here for you. I would like to wish everybody a wonderful weekend and a very profitable day.
Thank you, Harold. Featured diamond, a 1.12 carat cushion cut, fancy, vivid yellow, internally flawless. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Good luck to our Edmonton Eskimos in the Western Final against the Calgary Stampeders. Remember, if the Eskimos win, we're on from 1 until 2 next week, and we don't even want to talk about the alternative. We'll be on at our regular time. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.